Hi guys and good morning. It is the 15th of December 2022, 8:09 a.m. London time. It's been a very long time since I've come live for you to offer you my perspective on the market. So here we are today. It's thoroughly overdue, and I think I have just some sober ideas again to share with you as the market evolves from here on out. I literally just recorded this whole entire video, but my microphone was off. So I'm doing it again. And it was a really good video. So I'm going to try and do as best as I can here. Before we begin, as you know, we've been working on and bringing together a network for basically late January, including a lot of you guys that have been with us. Some of you now for 2 years, 1 year, 3 years, 4 years, 5 years. Again, I just want to express my appreciation for your support, your early support. Created an investment that I think is something asymmetric, but certainly I think it was a very good idea to now, since a lot of you guys are more experienced, leverage our brains together and form something that is far more powerful than what we had before. So I'm very, very excited, and thank you for getting on board. I'll try to do my absolute best for you to provide you with something that is meaningful, right? If I do not, I cannot sleep at night. So let's now begin, right? Let's start looking at the market. And we're just going to generate context based on the NASDAQ, then we're going to go to BTC, and then we're just going to conclude with 2 altcoins. So it's just 4 charts today, and then talk about general sentiment as we go into the 2023. First things first, very, very simple, NASDAQ, right? Been through this multiple times, right? The current area that we are at in the NASDAQ is we're at the pre-COVID low. So here was where COVID hit. Here was the parabolic run during COVID. We've now reached that area. We've swiped that low, that pre-COVID pump low. And what we're currently doing is we're sandwiched in between basically a series of repeatable downtrends and between that low. Locally, we're looking exhausted. So if you look at this move here, because this entire narrative has been repeating, basically what this means is up move parabolic down leg, up move parabolic down leg, up move parabolic down leg. There's no reason to assume this doesn't happen again until it displays something different, which I will show you in just a moment. Right now, we follow this leg up. We have series of highs. We have almost a distributive range form here. I initially tried to short this swipe of this high, and I thought it would lead to further downside, especially here because we broke market structure, but that's not the case. We've come up to raid it a third time, and usually I look for 3 max before I just give it a rest. So I'm looking to be short here. This is also a great example of how the market doesn't have to follow your pre-existing paradigms. It can do what it wants, yeah? Just because we swipe a range high and then puke with intention doesn't mean we can't get a triple raid, which we have here. So my current, I'm a little bit annoyed personally because I had a short order literally right here. Front run, now insinuating downside, right? Targets right now for me are, so if I just remove everything, feel of this inefficiency here, and then this low. Yeah, those are the 2 targets. Right now, I'm feeling partial in this general area. It's very poor risk to reward, so I've got a very small amount, and I will basically build to a full position as we start to move back up here. All right, and then when the trade moves off, then I'll upgrade the stop. Yeah. This is basically the way to squeeze the maximum out of a setup that you've been waiting for a while. You know, if you have been waiting for a long time for a particular setup, it's not really smart to just take a small execution, right? If you're sure that the general direction has switched, you want to convict in comparison to how you want to risk, in comparison to how high a conviction you have, and then on qualification, yeah, and qualification will come on a retest of this high and then a break of local market structure. So feel more here, shave off. It's very, very simple. It does not require too much thought. Now let's talk about the weekly, the monthly, and everything underneath that. What are the chances that this now pukes to a new low? I don't know, alright? I don't know. It could happen, and it could not happen. It's the obvious basic answer. What I do see here is that there is a probability for this to start trading sideways. So if you look at the market right now, you can see that it is spending a lot of time in this general area. Right? If it continues to spend time in this general area, aka it does something such as this, it will look like it's the beginning of an accumulation period, no matter if that low gets swiped or not. Yeah. So we're looking for price versus time to continue to insinuate that it's diverging against the trend. Yeah. I.e., we want a curve to start forming here. If then, for example, we have one of two things occur. One, this curve forms and then we get a quick dip below the low, right? And then we reclaim that. At the point of reclaim, you don't even wait for the retest, you just get long, right? And we would target the previous breakdown area. Or number two, if we, for example, start to chop around here and then break this former high, well, then you execute at that point with a similar target area. All right, do you understand? If not, until then, we short these internal rips, and we want to simply assume that we're just going to go lower, right? Target 1 here, target 2. But if, for example, we close below this low, we just reinitiate the position and basically target a lower area, which is around here, yeah, which is around the 9,000 marker. It's not really complicated. But from there now, you know, we're seeing a lot of people get bullish in this general area. It's not the right time for me. Translated to BTC. So that's the first opportunity. Second opportunity is right now. It's not a tough one. BTC on the monthly is still moving down. Yeah, we have a strong candle close below 19,910. We have a general supply area that is present here. The low may be in here, it may not be in. We're just dealing with the local price climate, all right? So what this now signifies to me is the following. If you look at the local price action and then you combine it with the context of the NASDAQ, you have two ideas that are present. Number one is that BTC has now reached exhaustion and it retests this area and then basically loses structure and sells off below this low. The second idea is a shoot off of that idea, which is a secondary short on this. If, for example, now this area enters into a distribution, we can wait for that high again to get raided and for that low to fail, and then at that point execute. And then the third idea is that you scratch these two, so these two don't work. So basically either we get this or we get this, right? If, for example, we get a full-bodied close above there with no loss of range high again, and we still continue, well, then you're looking for weakness in a different area. But the trend here is that we're looking for 1, 2, or 3 shots at a short to take us basically around to the range low and further, yeah, at the moment. And that's very, very, very simple. Sometimes we overcomplicate it, but there's no need. And once, you could say, oh, what if it doesn't happen in the first try and second try? That's fine. If, for example, we get the short entry on a swing basis, we can simply add to the swing and move our stop lower. And so what you'd ideally do is, once it shows intention, you'd reshort on the way to your target, considering, okay, that the NASDAQ itself and the general market context is according to this, yeah? So I'm a bear on BTC, I'm a bear on NASDAQ. Very, very clearly, it could change, but we need some change in market context. Next thing I want to touch on is Matic. So this is then the same idea for Matic, yeah? For me, we have topped on this. If you look at the monthly, huge Sir Lancelot candle. We have unrelenting pressure towards the upside. We have a distribution range, I would say, that's formed in blue. We have monthly exhaustion in red. We have basically an overlapping of two areas of a premium, right? We have an overlapping of the blue premium and the red premium, which now occurs here. So basically, the idea for Matic is to get short soon as we arrive close to this blue area, and then if we confirm a breakdown, again, just keep executing back towards this low here. Right, it could definitely go much lower than it is right now. If I turn this off, we're in pretty much of a steady downtrend, and Matic could definitely puke itself further. But given just the general market, I don't want to assume that some of these alts now go down another 90%. I'm not interested in that. Yeah, if we're going to look at Matic, at least from this chart, you have 1 leg, 2 leg, 3 leg. I would expect something such as this before the macro high is in. Excuse me. Okay, and so then the same is with Ethereum. In fact, before we do that, let's look at altcoins. And in general, what do people think of altcoins? Well, they think that they're going down an extraordinary amount further. Right now, we have, I would say, equal lows here. It would not surprise me if we do something like this for alts. Can you see that? So we're currently at 480 billion. I wouldn't be surprised if we form divergence at a previous monthly high here, so we do something like this. And then the moment we break out of that structure, which could take a long time, so hold on, let me just make this less messy for you. The moment that we would break out of that structure, which would be intention back above this blue area, it would be at this circle place. That's where you'd start to add, and you target the pre-breakdown zone. Yeah, that is really how I'm playing altcoins in general, but this applies specifically to ETH, right? I think if we take this low for Ethereum, there's a very strong chance, especially if we fail it, that is your long back up to 3,400. It would also be poetic, because I remember back in December 18, I bought a little bit of Ethereum here, but I was waiting, guys. I was waiting for something stupid like $79.50. When I could have just bought it $1 higher and rode it up. And I was forced to buy back Ethereum later around 296 to sell up back here. But it would be poetic because, if, for example, I was to wait here again when it reaches the same multiplier, 800, which is 10 times off this area, when it's formed a swing failure, that would be interesting. So I'm looking to, in fact, buy Ethereum on a new low if we get that. I'm looking to start to invest there. That now brings me on to my next focus, right? And that is, well, what is happening with the market from here on out? People are saying, oh, we're going to go lower. We're not going to go lower. 3K, 12K, 10K, 9K. Honestly, guys, I don't give a flying fuck. Like, I really do not. And you can probably know that from how I've been talking in the last few months, few weeks. And why do I speak so bluntly? Really, because at high pressure zones, speculation, I can't be bothered with it. What's the point? What's the point to speculate? I, at the moment, have a plan that accounts for two things. It accounts for the market going parabolic here, okay, as BTC loves to exhibit. If you look at history, especially on the weekly, pre-parabolic moves, there is very, very, very rarely any indication from candles that it is going to do so. Here, full-body weekly candle, sell-off. Here, 2 full-body weekly candles, infinite pump. Massive weekly candle, infinite pump. Little indication here, for example, infinite dump. Little indication here, infinite dump. Do you understand? At some point, we need to figure out, or we need to consider that crypto, it doesn't need to indicate to you that it's going to go parabolic just from a chart. So that's the first thing that I have meted into my plan, which is why we're buying small amounts of X coin or Bitcoin in this general region, and it's why we have a plan to buy as and if we go down. The next part of that plan is, as I tweeted a few days ago, DPA rather than DCA. Basically means dollar panic average. Yeah, so we are starting our averaging at low prices. We never started anywhere up here. We've said above 21,000, there are no buys ever. We're not buying any more BTC above 21,000. We're waiting small amounts as we move down, and then once we reach the height of the panic, we will manually inject the other 50%. Yeah, that is what I frame right now as dollar panic average. It's not easy to catch the bottom. It's a much less stressful way for me to outperform the market. And the only thing that is required in order to do this is extraordinary levels of patience, which is not easy to do, because in the meantime, and sometimes you have to wait for your money rather than earn it in the short term. And it's why many people cannot do this. Yeah, it really is. And I know now a lot of you are saying, oh, well, what about FTX? What about Binance? What about this? What about that? I really want to hammer this point home. Yeah, the market will convince me, you, and the majority of people out of buying an area which previously you viewed as a discount. Do you understand? Right now, we are at not only a discount, but an area where others are finding it difficult to execute. If you focus on game theory, i.e. that this is an industry where people are competing against each other for the same pot, or where people buy things when others do not want them to sell to them in the future, these criteria are now starting to qualify, right? And the criteria can qualify in many ways. Yeah, it can qualify on not really getting to 14,000, so a weak low here and then a parabola, right? Or it can just smash through all expectations and go to something major like 8,000. Yeah, those two sides of game theory here, i.e., mess up most participants whilst offering a good deal perhaps in the future where people will be too scared to execute, or a parabola that leaves the majority behind. You know, our plan has both included. Yeah, and that is really why I'm not interested in speculating. I do not care. I honestly do not care. At some point, for me, it's better to dumb down the IQ and just follow a logical plan, right? Because look, I understand this. Yeah, we have two things that have happened, right? We have had the FTX blow up, right? Which is very, 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 very scary. And we now have a potential blow up in Binance. But I want to say to you that you can't be operating ever from a fear mindset or a euphoric mindset. I understand, and it seems logical to be afraid if you've lost your money, and therefore be afraid to lose your money again. But if we operate through this or this, the information that we see does not get processed in a balanced light. Yeah, you should know this if you've been with us for a while. This is one of my main teachings. You have to remedy and rectify your mind in order to deal with either of them at pressurized areas. Because if you lie in fear, you're going to just inflate every bit of bad news. Bad news is going to seem so convincing and relevant to you that you're just going to take everything for face value. And at the euphoric times, you're just going to ignore any fearful information. So what happens is when we get lost in either, we ignore the other side of the equation. We lose a central, logical-based, execution-based identity, yeah, and we start to just become emotional creatures. When you're in discount or premiums, that's the worst thing to do. Emotion. You can't do that. You need to look deeper. I'm not saying that my plan will 100% be certain and that we will go to the moon from here. I'm not saying that. But as traders, we need to take probabilities and shots over time, and that's all we can do. This is an application, especially if you have good amounts of money left and you didn't lose too much from FTX. It's your job to think logically. It's not your job to think with emotion at the moment. It really is not. We could definitely go further, but I am doubtful for now, but don't care too much. And so to conclude this video, that is really what we think. And as a last point, I want to say to you, that even though the bottom is in, doesn't mean that it's going to be an easy ride. What do I mean? Look at the bottom from December 18th here. How long did it take for the market to reach a point where the general consensus is we're going to the moon, there is a new bull market? Here, 12,489. At that break was when the market started to truly go parabolic. That was 644 days. The distance between also the previous low and the previous high was 1,064 days. That is between 2 and 3 years. During the initial 2 years, we had to deal with only up after a bottom with no significant warning signs. If you're just a normal trader, we then had to deal with that entire move being retraced. We then had to deal with the chop that came after, and then just an only up parabolic environment from there on out. It is also worth saying that this parabolic movement, the most of it was only for around 180 days, which is not much in comparison to how long it was spent there. You could say, oh well, sir, there was this distribution period doesn't count for me. The majority of sentiment was in this period, which is around 5 months. That's not long. That's not long, especially when you're inside of it. It's not long at all. So the general thing here for me, the moral of this story is that this time, last time we bought some investments here and then we really just nailed this area. We committed heavily here, sold out here, rebought here, sold out here. This time we're looking to be even earlier, and we're looking to execute on the market at a point that's much more difficult. And to do that, we need to stay strong with a thesis and realize that this entire thing could happen again in terms of time. It's a very long way. I mean, it's not pleasurable for you guys to understand this, but in doing so, you will realize the majority of your strategy and the majority of your application will probably be inside a time where it doesn't feel quite good to do so. If crypto does not go to zero, mind you, right? If you can manage to exhibit that quality, there's no reason why you won't 100x, 50x, 20x, however much multiplication you are able to take out of the market, given that this at least retests 60k. Given that it at least retests 60k. And so keep that in mind. Keep that in mind that the bottom is uneventful in many ways, and the reaccumulation range, if you're unable to keep it in context, for example, it's just going to chop you up, and all of a sudden it will be February 21 again. You don't have many bags, and you're mindlessly running around trying to execute into things. The price you pay to not have that is to really sustain patience and boredom when everyone is convinced of a lower market and when the market is just washing you up and down. It's not a nice thing because you have to sometimes sit in lack of profit if you're an investor for a very long time, but that's the price you pay. You either pay now or you pay later. This is all considering crypto does not go to zero. This is also why, to conclude this entire video, we've just transformed our entire project into a network. Now is the right time, especially on the ascent of AI, especially on how DeFi is coming to the world, changing world money, changing global economics and finance, emerging sectors, everything. We want to basically leverage everyone so we get access to the best opportunities at the best time, and that's where the money is going to be at, right? Unequivocally. Even if we're not trading this and we're trading NFTs, for example, and we're going to be trading NFTs, and not just utility-based NFTs, collectible NFTs, because there's a massive run coming there too. The new narratives, and metaverse is actually taking a back seat. It's still part of the narratives, but right now it's looking as if AI is number one, DeFi is number two, right? Metaverse is number three, and then a separate complete narrative is NFT, which is basically a separate market, I would say, because you can chart NFTs. So the focus for the entire network going into next year is going to be these 4 things. We're going to focus exclusively on these things. And come January, I'm going to bring everyone together to think, to find, and to learn about these subjects, and also be producing a lot of content in order to break down where the money can go and how we're going to protect ourselves against the unfolding world. Because within 5 years, 5 to 6 years, the entire landscape is going to look completely different. I almost promise you that. People are underestimating how quickly AI is moving and the demand and need for it in a society where the younger population are now growing older, and those younger population are entitled. They don't want to work in the same way that they've worked beforehand. They do not want to do that. They're addicted to video games. They have different kinds of personalities. And the fabric of society only runs on the fabric of the people. And so as we start to inundate children with more and more technology and less work and more entitlement, the need for AI and robotics is just going to skyrocket naturally, because it's going to be the only way out. And it's inevitable. It's absolutely inevitable. So we either now start to move our chips early to deal with it and profit off of it. Same with DeFi. Same with games and Web3. Or we don't. That we don't have a choice at the moment. And that is really the direction we're headed in. Thank you for tuning in today, guys. Hope that was helpful for you. I'll be releasing another bull market review probably late January, where I'll perhaps be bringing on guests this time to comment on our final thesis. Thank you for tuning in. Have a lovely day.